Good morning, everybody. Lovely to see so many people online for today's webinar. And you can see Nicola Beswick, and you can see myself, Nicola Graham. So today's webinar is taking control of your finances. Our presenter, we're very fortunate to have Nicola Beswick today. I'm your facilitator, Nicola Graham. I'm going to just run through some very quick housekeeping slides before I hand over to Nicola. So you should be able to see the presenter and hear the presenter and see the slides. So if for any reason you can't do that, please just let me know and type into the question box, and I'll talk to you about how to do that in a moment. So here's your control panel. For most of you, you'll have this orange arrow here where you can minimize or maximize the control panel. And then really importantly, there's a drop down box here where you can type in your questions, and please feel free to type in any questions and we'll respond to as many of those as we can that are pertinent to the webinar. Any other ones I'll pass on to Nicola and she can address them with you as well at another time if we don't get to do them today. And thank you, Roberto, saying yes, that you can see and hear us, etc. It's always fantastic to get a response from somebody we know that everybody can see and hear. If you're on an Apple or an iPad, your control panel's at the bottom, and or generally it's at the bottom of your screen, and there's a little question area there. So please do type in your questions. You will all have received your handouts. The lovely Annie sent them last week. Again, if for any reason you haven't, then get in touch and we'll send them. And we are recording the webinar, and you will be able to access it through the webinar library at our web address here, where there are many, many other recorded webinars as well. So for reasons about recording, we'll start the webinar effectively again. It allows us to edit out the housekeeping, and it means that you've got a nice, easy webinar to look at in the future. Okay. Welcome to today's webinar, Taking Control of Your Finances. And your presenter today is Nicola Beswick, and I'm your facilitator, Nicola Graham. So we like to start all our programs with an acknowledgement, and we acknowledge and pay respect to the traditional custodians, past and present, on whose lands we meet today. We acknowledge the deep feelings of attachment and the relationship of Aboriginal people to country, and respect the cultural authority of the elders in each community. So our wonderful presenter today is Nicola Beswick. She's a certified financial planner at GFM Wealth Advisory. So Nicola entered the world of financial planning after giving up a career as a patent attorney to become a financial planner. And Nicola decided to pursue a career as a financial planner after appreciating the true value of receiving financial planning advice after her father was diagnosed with multiple sclerosis. So Nicola's genuinely passionate about working with people and understanding what's important to each individual and what they wish to achieve. Having a chat with Nicola just before the webinar, I realise that she's also providing aged care advice from a financial point of view, studying for her master's in financial planning, and she's a member of the SMSF, so the Self-Managed Super Fund Association. And Nicola told me in her spare time, her and her partner Mark and Chloe, the retired greyhound, she loves spending time with them, and scuba diving with Mark, not with the greyhound, just with Mark, and likes spending time with, as we all do, with friends and family. So just a note here about informed choice, and then I'd like to hand over to Nicola. So I'm just going to change screens now. So Nicola, you'll have that box that comes up and it will be over to you. Beautiful. Okay. Thanks, Nicola.
You're welcome, and you can see the presentation now.
You can see your presentation, yeah.
Great, thank you. Now, good morning, everyone, from a very chilly Melbourne morning. I hope you're all keeping nice and warm today. Today's webinar is a series of 5 that I'm presenting on behalf of the Pro Bono Financial Advice Network, and it's all about taking control of your finances and different facets of which finances impact us. The Pro Bono Financial Advice Network is key goal is to connect financial advisors who are willing to provide pro bono advice to those who are undergoing financial hardship, specifically those that have been struck with a health crisis such as MS. And as you know, I'm here now because of my beautiful dad and part of this wonderful organisation that helps connecting those financial advisors out there with the likes of you who are listening today. Now, as Nicola highlighted, I have a range of qualifications and haven't given up studying yet, and I am a financial planner through a company called GFM Wealth Advisory, and can see my specific contact details there. However, there's also contact details for the Pro Bono Advice Network at the end of this presentation as well. Like anything, we're going to run through a couple of things that apply to a specific situation, but if you are thinking that something I talk about today is something that you're interested in, or there's a facet that you may think applies to you, please get some advice. Make sure that you talk to a professional, because a lot of these different strategies exist. There's a range of different things, so I really do highlight that you please just talk to someone, because it's really important that you're getting the best advice possible for your specific situation. But I'm really here today in front of you purely because of this wonderful man in this photo here. This is my beautiful dad, Ron. He was diagnosed with multiple sclerosis in his mid-50s, and he was one of this really fortunate people to have an income protection policy, which enabled him to navigate through the world of MS and finances at a time when he needed it most. And he really put me on this path that I'm on today, and I can really understand the benefit of getting advice and also what it's like for seeing someone or go through MS themselves. But today I'm not here to talk about me. I'm talk about financial planners and how financial planners can help everyone, and the type of life cycle that financial planners look at on a general case-by-case scenario. But we know that life isn't necessarily straightforward and things can change, and we have put together a series of webinars that explore changes that real life people who have been provided to us through MS Connect, and a way financial planners helped them navigate the financial world while they were going through their MS diagnosis, as well as their carers. So today we're going to talk about how a financial planner helped both a lovely couple, Mary and Gary. The first thing really to highlight is the general nature of which financial planners can help individuals. It's taking a snapshot of where someone is today and looking at where they want to go, and bridging that gap between current and goals, and looking at a whole range of different facets of financial planning, whether it's cash flow management, whether it's insurances, whether it is estate planning, or wealth accumulation, there are a whole range of things that financial planners look at, but there are things that financial planners rely on with the use of other key professionals. Lawyers, for example, are really important with preparing estate planning documents, and also financial counsellors are there to help people navigate the issues when they're talking to creditors and things like that. So there's a whole range of professionals that we all use to get through someone navigating to get towards their financial goals. So I talked about the typical life cycle from a financial planning perspective and the things that financial planners look at, and it can be narrowed down to really 3 key areas, and that really is dependent on someone's age and position in terms of whether they're single or raising a family, or in retirement, or actually enjoying their retirement years. And so these situations from a life cycle perspective, from a financial planning perspective, have completely different avenues that we look at. But what happens when life does take that unexpected turn? It's great having the normal in the box. These are the things that you can do, but we know life, it isn't straightforward, and it can change, and it does change, and particularly with when you're diagnosed with MS, or whether you're got to a point where it impacts you, your situation, it can change your financial world. And this is exactly what these people experienced. The lovely people at MS Connect provided us with 5 different situations of actually real life people that were undergoing impacts in their situation from a financial perspective because of their diagnosis and progressiveness of the MS or other diseases that they've been struck through. So we actually talk about these people and how a financial planner helped them. Today, we're going to really explore the situation of Mary and Gary. Now, Mary and Gary came to the MS Connect purely because Mary had got to a point where she was unable to work due to MS, and they realised that this really took an impact to not only their children, but also Gary, who is Mary's husband and also carer. His work reduced significantly because of the care that he was providing to Mary at this time. The first thing that their financial planner did for them was understand what was going on for them. It's a very emotional and stressful time for anyone, and particularly with Mary. She raised her concerns around having to leave her place of employment because she felt that she couldn't work anymore, and she knew that Gary was looking after both her and their children, and this had impacted his working capacity as well. This obviously had some concerns, and because they had a mortgage and 2 teenage children, they knew that this change in income from employment for both of them was going to impact them significantly, and they had some savings but could see this really declining quickly and not getting them through this time for a long time. And Gary's really important in this situation as well, and understanding his concerns and key areas that he wanted to address was really important. Caring for Mary as well as their children was a priority, and he was fortunate enough to be in a position where he'd been employed by the same company for such a long time that he was able to reduce his hours and still retain his place of employment. So at least one benefit for them there. But financially, it's a question of where do they sit and what do the numbers, so to speak, tell us with Mary and Gary's situation. We know they've got 2 children, but they're currently in their mid to late 40s, and like many people with children, had a $400,000 mortgage. They estimated their day-to-day cost of living was approximately $80,000 a year, which was great. But now with Gary's income, which had actually been cut down to $80,000 without having to take into account any tax, this put them in a position where they were uncertain as to how to meet that at least $80,000 plus mortgage repayments. They had $100,000 worth of savings and some superannuation insurances, but weren't really sure about the key details with that. So taking this into consideration, their financial advisor looked at a number of key points for them. So they firstly having a look at cash flow and how do they manage that ongoing repayment from a mortgage perspective. Do they have any insurances, particularly Mary, because of her progressiveness with her MS? And what is their situation like with superannuation as well as any government support? And finally, what do they do with that money that they've worked so hard for, with their cash savings? That is really important for them, as well as other bits and pieces that are key for anyone to look at. So the first point is really understanding their cash flow. So we know that income is really important for anyone, and that is the most important aspect to get a gauge as to what we're looking at. They were previously in a position where they had quite a reasonable amount of savings before both Mary stopped work and Gary cut down his hours. But now they were in a position with Gary's income being reduced to a point they still had to meet their ongoing living costs as well as their mortgage repayments. This put them in a position of essentially a cash flow deficit. They knew that their $100,000 savings that they had worked so hard for was only going to last them a couple of years, because they would have to use approximately $40,000 of that just to meet their own ongoing needs. So this is the really key thing, understanding this side of their situation. So what their financial planner did was look at insurances. Now, with Mary being in a situation with her MS, it was key to look and understand not only for her benefit, but also Gary's, what potential insurances they had. Now, there are a range of different types of insurances that are out there, many which people on this webinar today would most likely be familiar with. Life insurance is one that obviously if someone passes away gets paid out, where total and permanent disability, or TPD, is a lump sum payment that, on the assumption you meet the conditions within the policy contract, pays out a lump sum payment to go towards costs and other use of funds. Income protection, which is again on the assumption that you meet the conditions within the policy document, pays out a percentage of someone's income on a monthly basis until the end of the benefit period, which does change for each individual policy, and goes towards helping someone's need for an income. Trauma, which is maybe one of the less commonly or well-known policies, is a payment of a lump sum, which is if someone suffers a one-off health event, and is also important to understand. So taking these different types of insurances into account, Gary and Mary's financial planner had a look at Mary's superannuation account and wanted to understand what insurance Mary had within her superannuation account, because they didn't have anything personally held. And fortunately enough, she had both some life cover, which isn't necessarily important right now, but did have some total and permanent disability insurance, as well as an income protection policy that insured her for her income for a 5-year time frame. So that was a really positive thing for both Mary and Gary, if they could satisfy not only the conditions within the insurance policy documents, but because this insurance was held within Mary's superannuation account, it was really important to understand and make sure that they could meet the conditions of release from superannuation to be able to get these payments paid out from the superannuation environment. Fortunately, again, due to Mary's progressiveness with her MS, she was able to satisfy both the income protection and TPD policy criteria, and was able to also meet the condition of release criteria within her superannuation account providers. So this provided both Mary and Gary with some really great income for the next 5 years, because of the policy from an income protection policy perspective running for that 5-year period, as well as providing them with a lump sum payment from the TPD that Mary had within her superannuation. And this went a long way to helping them from the cash flow perspective. They went from being in a deficit where they knew that they had to use some of their savings to get them through, to a position where they actually had more than enough money. And that was because of, again, that income protection. And with the TPD payment, that went straight onto their mortgage and enabled them to reduce their mortgage repayments for a period of time as well. So they were very, very fortunate in this situation to have that excess cash flow. And then understanding that if they did nothing else with their mortgage other than put that TPD payout straight onto their mortgage, the time frame to repay the outstanding balance was reduced significantly. And you can see here, if we take the tax implications out of this equation. We've gone from having a mortgage that could run for 30 odd years to 11 if they did nothing else other than take that TPD insurance payment and put that straight onto the mortgage. So you can imagine that they're both pretty happy with that outcome alone. But the other thing to really look in this situation is not only Mary's insurance. It's great having those payments to be able to supplement their living costs and reduce the mortgage down significantly. But Gary is equally important in this situation. He is the primary caregiver for not only Mary but their 2 children, and so understanding what level of insurance Gary currently has and what the need is should something happen to him and Mary and the 2 children were left there. So Mary and Gary's financial advisor did a calculation to really understand what, if any, shortfall existed for both of them, and not really surprisingly, they came up to a gap on the life and TPD for Gary, but also the income protection. Now, similar to Mary, his policy only ran for a 5-year period, and at the end of that 5 years, that income protection policy, if something was to happen to him, would stop. So here we are with two individuals who have insurance policies from an income protection policy only pay out for a 5-year period. And going back to that really key part of the start where cash is king and we need to have that cash flow coming in, replacing and ensuring that Gary had adequate cover from a income protection policy was particularly important to understand. The third thing that their financial advisor did was take stock of their respective superannuation accounts and ensure that both their accounts were not only performing, because we all want to make sure that we're paying for something or our money's working hard for us, but understanding that how they're invested within their superannuation is suitable to where they are right now. We don't necessarily want to have someone put in an investment option that doesn't necessarily suit their life stage. And so understanding both the investment option for their superannuation, how much they have, as well as the underlying performance and the fees and costs were all really important things that their financial advisor did for Mary and Gary. And then also looking at the all-important Centrelink and what potential eligibility is there. Now, unfortunately, for both Mary and Gary, because of the amount of income that they had, not only from Gary's income, but what Centrelink assumed their savings to earn, as well as Mary's income protection payments. This put them above the upper threshold for the income test for the disability support pension for Mary, as well as impacting Gary's ability to receive the carer allowance and carer payment. But one thing for this is a snapshot of right here, right now, and it really is that income protection payment that Mary was fortunate enough to receive that put them above the income test threshold. So because we know that this only runs for a 5-year period, checking in at the end or close to that benchmark of time was something really important, because if they could receive the disability support pension or the carer's allowance or the carer's payment, this was really beneficial for them. I just wanted to reiterate why that's the case here. For many of you who understand Centrelink, apologies for the refresher, but with Centrelink, particularly whether it's the disability support pension, there's two tests that Centrelink look at. They look at the income, so how much income someone's receiving. You can see here with the circled amount here, this shows for a member of a couple, so both Mary and Gary, they were receiving essentially too much income. So that pushed them above this test. But as soon as that income drops with the loss of that income protection payments, this was a key strategy to reconsider for them. The asset test, which is the second of the two tests that Centrelink apply for for the disability support pension, wasn't going to be an issue for either Mary or Gary, because they fitted within that threshold of being able to receive a pension from the asset test. So it was really fundamentally key to understand that income test and what the drivers were for them. The other thing, and this, I guess the little pig in the money hat says it all. We all know cash is king for anyone, and that $100,000 that Mary and Gary had saved for emergencies, their advisor said to them, let's just keep that there. Let's just have it still as an emergency, because again, we don't know what the situation is going to happen. Rather than paying off the mortgage, let's keep that money in a high interest savings account, something that's going to generate a slightly higher level of income, but give that stability that we all need from an emergency fund. So really, really key and useful advice there. And finally, other considerations, and this is really important for anyone, is getting the right estate planning documents in place. So Mary and Gary were put onto a lawyer who specialised in estate planning, and they enabled to get them up-to-date wills, power of attorneys, and also directives around what they may want to do from a health perspective if something happened to them. And finally, I guess the last part about their situation is looking at ongoing financial advice, whether it's on an annual basis or at a point where something changes. So for example, with Mary's income protection policy, we knew that only had a 5-year term. Essentially, that was a key point to re-engage with an advisor to ensure that they were still on the right track, because things, as we know, change, and that ongoing advice and connection with someone that they trusted was particularly key for them. So today we've essentially done a quick snapshot of how financial advice helped Mary and Gary. This, like I said right at the start, this is just one of the many situations that exist out there today, and every situation has a range of complexities that are all different, just like us as individuals. So it's really important that you don't try and do anything yourself, that you get some advice. Come and connect with us at the Pro Bono Advice Network, and we'll put you in touch with an advisor who can help navigate through the world that you're in at the moment and understand what you can do and where you can go. And in the webinar on the 9th of September, we'll be talking through one of those very beautiful people that I introduced you briefly to at the start, and how their financial planner helped them with their specific financial situation. But before I go, useful tips and things that you can potentially look at in your situation are always really helpful. And many of you are probably sitting here right here today going, what can I do today? What key things can I
Nicola,
put on?
can I interrupt you briefly? I've got a couple of really good questions that relate to the bit you've just covered that I'd
Of
love to
course.
ask you. Okay, so Justine has asked, what is an illness separate couple?
For the Centrelink. So illness separated couple is when a member of a couple are no longer living together because of their essentially illness. So for example, if someone had to leave the family home and go into a facility, like a care facility, that's a couple separated by illness, and that's something that I'd imagine you would come across with. I hope that answers your question.
Yep, that's great. Thanks, Nicola. And then Jacqueline's asked, with the 100,000 savings, is there a benefit in putting that into an offset account to their mortgage to reduce the interest and still have access to the cash in an emergency? I like Jackie's thinking. What do you think, Nicola?
I like that too. That is certainly a really good course of action. That would be a very good result, not only because we're reducing the interest, but also because you've still got that stability for the cash and access to that in the emergency.
Yeah, fantastic. That was all the questions at the moment. Thanks, Nicola.
No,
and Jackie
great.
says thanks, Nicola, as well. So she appreciated that.
You're welcome. You're more than welcome. So maybe that's helpful. Tip number one is, looking at that from a situation. Thank you, Jackie. That's a great tip there, and we could all potentially consider that, depending, particularly Mary and Gary. But other things to look at is really understand what your plans are, short term as well as long term, because understanding what you're looking at in both of those perspectives gets you a really good idea of what you're working towards, and look at setting yourself out a budget. And I know creating a budget's never easy or fun. I certainly have a lot more interesting things to do than creating a budget, but really understanding what income you have coming in. Can you get any government support payments? Can you increase your income some way? And what are your expenses going out? Can you change where your money's going? And you know, things like reducing or changing interest rates on a mortgage, you know, that can make a huge difference, or using an offset account. Those kind of things are really really useful, just the small changes to make a difference with every dollar that you've got coming in. And then working out how long your savings may last. If you know where you sit, you can plan for the future, and you know, consider things like accessing superannuation if you have to, looking at your insurances from a TPD or an income protection perspective. These are all really useful things to ensure that you can fund or meet that income that you need, but ensuring that you meet the policy conditions within insurance policies is really key, and they all do vary throughout individual cases. So just double check with that, and there's professionals out there that can assist. And finally, it's creating that team of trusted professionals. Really, really, really important, because you want to have someone that is there on your side to help you navigate through a world that has so many different complications and scenarios. And so that's probably one of my biggest and my most favorite tip, is getting that support around you, not only on a financial basis, but also everything else that we all go through. And to contact us at the Pro Bono Advice Network, you can talk to someone at MS Connect, or you can go directly to our website and find an application form, or you can give us a call or send us an email, and we'll put you in touch with a group of someone who's willing to support and navigate through this time that you're going through. And that is the conclusion of today's webinar. Now, I'm not sure if there's any more questions that have come through, or is there anyone?
Yes, thanks, Nicola. We've got one more question, and then I've just got a couple of housekeeping slides to finish. But Tina has asked, with the TPD payment, if it's deposited straight into her super fund to withdraw, she's been advised there'll be tax paid to be paid. Is that correct?
That's absolutely correct, and that is a very, very complicated situation, and there's a reason why I haven't gone into detail with that, because the tax that's paid depends on how it's accessed and your age and so forth. So that's really important to get an understanding of, and that's where getting that specific advice is really, really important. So I'd highly recommend that you talk to someone and really understand what options you have with regards to that.
Okay, thank you so much, Nicola. I've just taken the screen back to me, and I'm just going to run through some very brief housekeeping for everybody. So thanks for your time today, Nicola. Lots of really good information for people, and they can contact you directly, and you've given your details so that people can have a more personal conversation with you about their finances. I'm just going to check. I think there might be one question that came up. Just quite a few thank yous from everybody, Nicola. Maria's also saying, I took my TPD out in small amounts and just paid tax each time.
Yep.
Yep, and Holly's saying, thank you, Nicola. This is very timely for me. I've been feeling rather lost as to what's best to do around the management of my financial future. And she's going to follow up. Jeff saying thank you, really informative, and Tina and a number of other people all saying thank you. So that's great, Nicola, really appreciate it. And I'm just going to very quickly run through some housekeeping. So guys, if you have any further questions outside of the finance side, if you need to speak to a nurse advisor or a social worker or an MS expert, you can call the 1800 042 138 number Monday to Friday. And there's some reasons in your handouts there as to why you might call MS Connect. Excuse me. A number of good reasons about education, information about treatment options, medications, support for people who are newly diagnosed, etc. We do a lot of peer support, so important. And we have one-on-one phone support. We have face-to-face groups, different groups in different states. We have telegroups. We have Facebook groups. So if you're looking to reach out for people in similar situations, then please do contact the MS Connect number. You can speak to one of our peer support advisors. We've also got some great tools for you. There's the Get Your Act Together, an online tool to help provide some advice around managing some of the common symptoms in MS. We've got a wonderful, which ties in a bit with what Nicola's been talking about today, we've got some great employment support services across Australia to help people find work, or particularly to help people succeed and stay in their employment. And again, access to that is through the MS Connect number. We are a registered NDIS provider, providing different services in different states. And just some information there around My Aged Care and some contact details should that be pertinent to you if you're over 65. So thank you again for your time today. Really appreciate you tuning in. As Nicola indicated, there's some more financial webinars coming up over the next 12 months with different scenarios. So if some of them relate to you in the future, we look forward to seeing you again there. Bye for now.